Hello traders, this is UCFS. Welcome back to another wonderful video. This channel is helping new and struggling traders to become acquainted with the necessary information and knowledge to be profitable in the forex market. Even advanced traders as well to even become more profitable in the forex market. So do well to support us on this wonderful journey by clicking on the red subscribe button and the bell notification icon to be among the first that will see our videos whenever we upload them. Thanks for doing that, and always remember to drop any topics that you would like us to make videos on in the comment section. We really want to connect with you to help you in any way we can. So without further ado, let's get into what we have for today. Market inefficiencies, imbalance, and fair value gaps, and how to identify them. And this would actually increase your profitability in the forex market. Okay, so market inefficiencies are simply institutional reference points, where the institution return to for fair valuation. So that is, the institution would seek for fair valuations at these market inefficiencies. And these inefficiencies are also known as imbalance or the fair value gap. So they're actually the same thing. Yeah, so what does a price inefficiency looks like on the real chart, and how can I spot them? Let's go back to the chart to answer that question. Yeah, so here we are on our USD card. This is the daily chart. Yeah, clearly looking at this area, you will see how price was heavily injected into this area, giving us this upward movement. So this is the area and the place that we want to look at our inefficiencies from. So inefficiency or imbalance is basically three straight candles with the highs and the lows of the middle candle opening or closing almost immediately after the above and below candles. Let me explain that. Looking clearly inside this area, look at these three straight candles, this one, and this one. We had a clean price action. As you can see, the opens of this middle candle, price opened almost immediately after the close of this candle. Then after that, price closed here. Then after closing here, this next candle opened almost immediately after the closure of this middle candle. So here we have our imbalance. So we're going to be taking our imbalance from the highs of this first candle, and as well the lows of this next candle. So this is actually what we call imbalances. So this is what we call imbalances, fair value gap, and inefficiency in the market. So the institution would seek for fair valuations at these areas in the future. So they would come back to it in the future to test it and continue pushing price in their intended direction. So they do stuff like this. As you can see, they came back straight into this area, tapped nicely into this inefficiency, giving us another bullish movement. As you can see as well, we had another inefficiency right inside this area. So we had another inefficiency right inside this area. As you can see, price tapped into this inefficiency, went up higher before taking this bearish movement. So there is efficient price delivery. So this is what we call efficient price delivery. So price tend to come back to fill inefficiency to give us efficient price delivery. So price came in, tested this inefficiency, filled this fair value gap, came back as well, filled this one. So this is what we call efficient price delivery. So let's move on to another chart to explain more on this. Let's check a USD CHF. Okay, so yeah, so here we are on our USD CHF. This is our daily chart. Yeah, you'll be wondering, I'm always using the daily charts. Yeah, I'm going to share this secret with you now on how to identify and capitalize on these inefficiencies. So it is always very important to look at the higher time frames for these inefficiencies, because the higher time frame inefficiencies are more effective. So let me explain what I'm actually trying to say. So here you will see this price movement, impulsive price movement. So it is clear enough that we have our inefficiencies inside this area. So let's go down to the S4 time frame to actually see the three candles and identify our inefficiencies clearer. So this is the H4 time frame. So this is the H4 time frame. So from this point, as price started moving, this is our three candles. This green one, this red one, and this other red one. So we're going to be marking out the close, the open of this down candle and the close of this green candle. So marking out from this area, and also marking out from this area. So this is actually where we have our imbalance. So this is actually where we have our imbalance. Remember, I used the daily chart to actually know where I have my imbalance. Then I came down to the lower time frame to actually make it clearer for me. So here we have our imbalance. So as you can see, price came back in the future to test this imbalance to actually fill this fair value gap. So I'll be explaining the three key measures or things that I actually look out for to take trades using imbalances. So I'm going to breaking that down. So let's go to the higher time frame. So here on the higher time frame, looking close enough, you would see that we have a break of structure. So we had a break of structure right here after liquidity was grabbed inside this area, because most traders were actually going long when price came back to test this area. So there was liquidity grab. So what does that mean to you? You start looking at the discount levels. So if you are new to smart money trading style, I would suggest or recommend that you go down, check the link in the description to check out more videos on how to trade smart money concepts. I actually made videos even on other blogs, how to trade other blogs. So you do want to check them out and understand more about the smart money concepts. So after that, we saw a break of structure. Then you have to be looking waiting for discount levels. Just like in real life, when you go to the market, you like buying, we enjoy buying stocks at discount prices. So here as well, the smart money or the institutional traders as well like to sell or buy from discount levels. So now the discount levels on the Fibonacci tool is actually the 0.618 and the 0.786. As you can see, we had a break of structure. That's rule number one that I actually saw, and to confirm this trade for me. So after the break of structure, we had price come back into our discount zone. So price came back into our discount zone, which is the 0.618 and 0.786 of the Fibonacci tool. And as well, if you look straight, we have our imbalance right at our discount level. So this is the three main keys or confluences that actually confirmed taking trades from this area. We have our break of structure, discount levels, and our imbalance. So this is how you would actually confirm your imbalance and actually trade them. So, because looking at this area, you will see we have imbalance here as well, but it wasn't that actually they mitigated or tested the imbalance but kept moving upwards. So not all imbalance actually do work like to reverse from the area, just like price did reverse from here. So you have to first of all understand the market structure, and that's why I have the video in the link explaining explaining how to understand the structure of the market and trade accordingly. So understanding this market structure, we saw a break of structure here. So this is clearly telling us that the market is about to turn bearish, and we have here situated at the top imbalance and price testing our discount level. So this is a clear price action telling us that price is about to move bearish. So having that in mind, you go down to the lower time frames. Let's check on the 2-hour time frame. So here on the H2 time frame, you would as well see how price reacted. We had our last swing low right here. Then after that, price took out these lows. So basically, trading the smart money, we need to wait for price to tap into a lower time frame order blocks. But as you can see here, we had instead we had a breaker block inside this area. Just like I would as well say breaker blocks. I made the videos as well in my channel. I will leave the link in the description, so you can as well know how to use the breaker blocks to catch more clearer entries. So here we had our breaker block. We had our breaker block right inside this area. So here we have our breaker block, and price came back, tested the last candle that took out this breaker, and then moved from that area. If you watch the video on breaker blocks, you would understand more on how to capitalize on entries like this. So from the whole break of structure on the higher time frame and the inefficiency on the higher time frame and return of price to our discount levels, so that's actually a clear understanding or a picture to actually tell you that the market is actually going bearish. So if you look here inside this H2 time frame, you will as well spot inefficiencies inside this area. As well, price came, filled all these inefficiencies to keep going lower. So you could have as well, if you have missed this entry, you could have as well gotten an entry right inside the zone. So I'll be making more videos on inefficiency, imbalances, explaining more on things to note and understand on next videos. So do well to drop in the comment section any videos or topics that you'd like us to make videos on, and don't forget to subscribe and like this video and turn on the bell notification button to keep notified and stay connected to this channel to gain more. So see you on the next video.